Hi guys, I'm Anthony Bidsall, going to take you through a couple of trades within the opening range on the DAX this morning. For all of you interested in learning how to trade indices, how to trade Forex, then this sort of play, this sort of trade, these sort of trades are absolutely ideal for all indices, including the FTSE, the DAX, the Dow, the S&P and Forex charts. And if you've watched any of my videos so far, then you'll begin to understand how I construct my trades and how I read price action to judge the probability, the risk and reward within my trades. You'll begin to see patterns in the way that I'm trading that will help you with your own trading and help you identify the same sort of good risk to reward trades. So this is the 1 minute chart, and this is my favorite trading time frame, certainly for the first hour or two of trading. And normally I'm looking at taking a couple of trades in the morning session, and that could be it for the day. And so the sort of thing that I'm looking for early on is I'm looking for the market to establish some kind of range. And the normal range that's established within the indices is, and certainly with the DAX, is established during the pre-market trading. So pre-market in the DAX starts around about 7 o'clock and it ends at 8 o'clock, which is here. So 7 o'clock here, 8 o'clock here. You can see that the market made a high at 7 o'clock and we had a couple of lows down here. This was a double bottom. And so I'm beginning my trading around about 8 o'clock. I can see this sort of price action on the chart and it gives me the context for the possible trades that I'm going to take during the morning session. So yesterday the DAX rose nearly 2%, so big up day. It's in an uptrend at the moment. And when there's been a huge up day and the market's put 2% on, then very often in the early stages of trading, what you'll find is that the beginner traders, the retail traders will tend to bet on the market going up. They'll take trades in the direction of the longer term trend, and the institutional traders, the banks, they understand more of the dynamics of how supply and demand work, and they know that when the market's been in a big uptrend, it's had a big up day, the chances are that it's ripe for some profit taking, and therefore the institutions and the banks are looking to for evidence that they're going to go short in the early morning trading. So I'm always looking to trade with in the direction with the banks, with the big money, and these are the type of traders who will force the prices in one direction or another, and they'll take the money from the beginners and the retail traders, and I'm interested in being on their side. So what we've got in front of us then is we've got a trading range. So the initial high being here at 7 o'clock and the lows being around about 7:30. Market opens at 8 o'clock and of course the market goes up. So the market goes up and it makes a high. This level here is 12,800, so it's a round number level. Yesterday's close is just above the highs here, it's just off the chart at the top. So the market failed to reach yesterday's close. And it put in a nice spurt to start off with, and it got everybody interested in going long. And then the banks, the institutions, did what they usually do and they forced the market back down. Now, there are telltale signs in the price action that we can identify that tell us that this type of reversal within this range, the market's failing to break out, although it's made a higher high, it's failing to break out with any strength from this high. And there are telltale signs to tell us that the market is likely to make a down move. And one of them is this gap here. So you see this candle here. This is where it closed at the low. It's a bearish candle, and the next candle opened here. So there's a gap you can see between these two candlesticks, and that's a sign of downward pressure. And that tells me that big money is interested in going short. We've also got some topping tails here, some tails on the top of these candlesticks. That's another sign that the market's getting rejected from the highs, rejected from the 12,800 round number level, and it's likely to go down. So with all gaps on charts, the market's always keen to close the gap as soon as possible. So when the market came down, made a low and pressed back up and closed the gap, that's of no surprise. But what is significant is this low here. When the market's in an uptrend, it'll make higher highs and it'll make higher lows, and then it will go on normally to make another higher high. In this case, you can see that this is potentially here. This is a low, these candlesticks here, 1, 2, 3, with lows at this level here. This is potentially a low. So you've got a low, higher high, higher low, higher high, higher low, higher high, and then it comes down and the market just squeezes below these lows here. So that's a lower low. And so when the market goes back up, it reaches these levels, it gets to the levels of the pins. So these are the previous close highs here, here. And when it reaches these levels, people are on the lookout for what happens next. And when there's a failure to go up at this level, then traders are looking for shorts. They're looking to go short. So as always, we wait for the trend line, mini trend line break. Here's a trend line on these candles here, on this up leg. And when the market crosses this trend line, and then, as you can see, let's just move that out of the way, you can see that the market then closes below the 8 EMA. This is the blue line, the 8 EMA. The red line's the 20 EMA. When it closes below the 8 EMA, goes up, rejects from the high again, and closes yet again below the 8 EMA. That's when I'm ready to look for a short. So for me, for my entry on this particular one, I'm going short just below these two candlesticks here. This is a very small candlestick, and when you're trading, small candlesticks are important, and blocks of candlesticks are important. Simultaneous lows, simultaneous highs are important as well. These two candlesticks here had very similar lows. This is pressure building up. The traders who went long here expecting the market to go up are trapped in their trades, and they'll exit once prices go below these two lows here. And that's exactly where I want to get in. So I'm getting in where the traders who are losing money are getting out. This is double pressure selling, and the market's forced down. It did give us a little scare as it went back up on this candle here, but you can see the huge rejection here. So if you missed this entry, then you could always have got in down here. Anyway, that was my entry just up there, and we're looking for a move down. Now, my risk, my stop for this trade is above this spike here, and I'm looking for a move down. And so the first target obviously is this low here. And so now the market's made a higher high, a lower low, a lower high, and when the market dips below this level here, if it reaches this level, which it did, then you're in a downtrend. Lower low, lower high, confirmed by this lower low, and the market just pulled back slightly and then came down. So I'm always looking for 2-to-1 on these 2-to-1 reward to risk on these type of trades, and we're able to get it at this level here. So this is the risk difference between my entry and my stop, and the target is, well, it was the low of that bar there, so at this level here. This is a reasonable level, although the 12,000s, the 75 levels on this chart aren't hugely important. You often see some kind of reaction at the 75 level, the 25 level, and of course the bigger levels, the 00 levels and the 50 levels. So it was a good place to take profits at that point in time. What you've got on the chart as well is, just remove these, is you've got a double top. So this is the first high, this is the second high. It's pretty good looking double top, although the middle of the top is quite, that's a good sign for the bears because it's a big sharp reversal. However, it's not particularly fantastic in terms of this double top trade. And the reason is that with a double top trade, you would look to enter. Let's put the entry on. You'd look to enter below here. So when the market comes down here, you'd look to enter. Your stop would be above here, above the second high, the lower high, and the target would be the difference between the highest high here and the middle of the double top here. So the target for this particular trade is going to be down here, which is okay in theory, but it's just below these two bottoms here. And you've also got the 50 level here. You can't see it, but this is the 50 level here. So you've got the potential for some kind of reversal in this area here. And the market did fail, as you can see, just before the target. It was 2 or 3 points before the target for the double top trade. And so anybody trading the double top would probably have exited as the market started turning up here. It's still have got just about 1-to-1 risk to reward. However, it didn't work out perfectly, that particular trade on this market. And one of the reasons was because of the size of the dip in the middle of the double top. So always be aware of that. However, it was a valid trade and it would have given us some nice profits. Didn't take that particular one on this occasion. The next trade that I took was as a result of this block of price action here. Now, I was expecting prices to come down to the 60 level or just below, and the reason for that is because you've also got this block of price action here, and the market is attracted to these type of blocks. It's attracted, and you often find that the market, where it's blocked before, you've got consecutive bars in different directions forming a block of price action. Prices are attracted back to those levels and they often stick and produce another series of consecutive bars in different directions at that level, which is what it did here as it was bottoming out. Anyway, this particular trade, you can see that there's a number of candlesticks in here that have similar bottoms, and you can establish a level within there. In fact, we can actually put a box around that particular series of bars so that you can see them nicely. And I did actually have a box around this because I like to be able to visualize the compression in the price action. So we've had a move down, we're in a downtrend leg, small, it's only a 1 minute chart, but downtrend leg, and we've got pressure building up here for a further downward move. And as the market came out of this box, broke this box, there was a massive surge of price action. It zoomed down here and I couldn't get in. I didn't have time to get in. So I on this occasion, I waited to see what happened. The market, as you can see, came back up. Move that out of the way. It came back up and left a spike here, but it closed at where my entry price would have been as the market dipped down below this box. It just came down too quickly for me and I couldn't get in. So I waited and I thought, well, it's at my entry price. It's broken this box. It's still looking good. So I entered on the close of this particular bar here and the market came down. Again, we're looking for 2-to-1 reward to risk on these particular trades. The stop, the risk was above these bars here. And with my entry here, we're looking for 2-to-1 reward to risk, and it was achieved on the close of that bar there. So two nice trades on the DAX 1 minute chart in the first 45 minutes of price action, all done for the day there. And this type of price action, it doesn't stop after the first hour and a half of the market opening. It continues all day. It's just that the best type of price action for me is occurring when the highest volatility is in the market, and that's during the opening couple of hours and the closing couple of hours as well when the US market's open. So you can trade all day. I've got other things to do. I coach traders and I train traders, and that's my passion. It's making success for you guys. That's the biggest thing, biggest motivator for me. I really enjoy trading and I really enjoy teaching. So for me, a couple of hours in the morning and possibly an hour or so in the afternoon. So hope you enjoyed that video. Hope you found it useful. Always good to get these videos out to you. Let me know, give me some feedback. Let me know you're enjoying them, or anything that you think I could do better. Any type of trades that you'd like to see, then just let me know. Give me some feedback in the comments below. My name's Anthony Bidsall. Catch you on the next video. Cheers for now.